Thanks for joining us on lunch. This is Bloomberg Quint. I'm Harsha Subramaniam. The headlines at this hour. The Sensex and the Nifty continue to trade lower, currently at the day's low. PSU banks lead the decline. Yes Bank's net profit fell over 90% in the first quarter as the lender continues to clean up bad loans. The stock trades 10% lower. Wipro is the top Nifty gainers today despite its profit falling in the first quarter. Higher wage costs and a stronger rupee dented margins. The Union Cabinet approved 7 changes to the Insolvency and Bankruptcy Code, including more powers to the Committee of Creditors and extension of the resolution deadline. The Kumaraswamy government moves confidence motion in the Karnataka Assembly. The state government will face a floor test very soon. We'll get to the action in Karnataka in just a bit. A quick check on how the markets are faring right now. Yatin is standing by with some of those stocks that are moving today.
Good afternoon, Harsha. And like the past few trading session today, also it's a lackluster day of trade. We are just 30-40 points down as far as the Nifty is concerned. At this point in time, not much of activity also seen as far as Nifty Bank is concerned in terms of volume and price action. In terms of the gainers, we have Wipro, which is duly reacting to its earnings, 3.5% up for that one. HDFC, the group stocks as well as the parent HDFC doing extremely well in trade today. In fact, HDFC has hit a record high in trade as we speak, 2% up for that lender. And also we have Britannia and Bajaj Finance among the top gainers on the Nifty 50 at this point in time. Of course, Yes Bank, the stock in focus, stock is down 14% as we speak, reacting to its earnings. Higher slippages as well as provisions have impacted the overall earnings performance for the bank. ONGC and Coal India are the other PSU stocks which are losing in trade, almost 3% down for each of them. In terms of active securities, Mindtree is one stock in focus. Stock was down as much as 10%, is right now also down 8%. Of course, a very muted set of earnings. Higher wage costs has impacted the quarterly earning this time. Axis Bank, ahead of the earnings next week, is down 2%. Also, we have Kotak Bank, Idea Cellular, as well as Indiabull Housing Finance. All of these stocks active in the future and options segment at this point in time.
That's the markets for you, and thank you for that. Yes Bank, meanwhile, reported a 90% decline in profit in the first quarter. Provisions against stressed assets on its book eat into their bottom line. Shefali is standing by with the fine print of Yes Bank's numbers.
Well, the numbers were completely disappointing from Yes Bank because the street was expecting that after the cleanup they did in Q4. From now on, yes, they will go slow, but there won't be that many negative surprises. But the numbers have clearly disappointed with net interest income growth of just about 3%, which was below expectations, and profit as well is down 90% on a YOY basis. Their gross NPAs on an absolute basis jumped by about 53% on a sequential basis, and in percentage terms, the gross NPAs came in at 5.01 versus 3.22 on a sequential basis. And the gross slippages came in at about 6,200 crore rupees, which was almost double of what they did in Q4. And about 2,500 crore rupees of slippages came in from the watch list that they had guided for of about 10,000 crores at the end of Q4. And even now, the management is continuing with that guidance of watch list of 10,000 crores. So that means that had those 2,500 crores not slipped, then the watch list would have been 12,500 crores. So that there's a negative surprise there. Other than that, the total stressed book has moved up to about 3.94% versus 2.65%. Even the BB and below book, which is a below investment grade book, that has also gone up to 29,000 crores versus 23,000 crores. So negative surprise on asset quality. The NPAs just continue to increase, and even one really important part for them is the capital position, because the CET1 ratio that has come down to 8% versus 8.4%. So that they're just meeting the regulatory requirement, and even with the fundraising plan that they have of about $1 to $1.2 billion, even if they do that, the ratio will not go up much. So that means to meet their further growth plans, they will just have, they will need a lot more probably. So that is a worrisome point. The urgency to raise capital at the current levels, because they are just at the dotted line. So that is a really crucial point for them.
Okay, so watch out for an interview that Ira is going to be doing with the CEO of Yes Bank, Ravneet Gill, but they also held a con call yesterday. Do we have any color on the asset quality?
Well, yes, they said a couple of things about the asset quality. The BB and below book, that increased on the downgrade of two financial services firms, which we have spoken about in last couple of weeks. And their real estate exposure is about 25%. That comes under the BB and below book. The watch list still at 10,000 crores, and they are still maintaining the credit cost guidance of about 125 basis points. And the important point is that that excludes the MTM on the investment provisions. Now, considering the kind of downgrades that we've seen in last couple of weeks, so these investments that they hold, the debt papers of couple of these stressed companies, so there may be a further hit, and that is not included in their credit cost guidance. So the actual provisioning that they make in the quarters to come, that may still weigh down on their bottom line. So that's a concerning area.
Shefali, thank you for putting that in context. Wipro, meanwhile, profits declined in line with estimates in the June quarter. It faced the same problem as its peers. Agam is standing by with the key takeaways of numbers from Wipro. Agam.
Right, Harsha. So, well, starting off with revenues, we certainly have seen a decline as far as Wipro is concerned. That should be coming up on your screen. In terms of IT revenues, we're looking at a decline around 1.8%. And this is not only below the guided range that the company guided for, but it is also below consensus expectations. Moving on, we are keeping an eye on several factors. Of course, we've spoken about this, but moving on, we're talking about several other factors. And in terms of constant currency also, well, it's a decline of around 0.7%. Okay, so operating margins are coming in at around 16.6%. It's a drop around 120 basis points, slightly more than what we were working with. And this is largely on account of, pressure because of, wage hikes coming through, a strong rupee and higher visa costs, which have adversely impacted margins. But as far as your other factors are concerned, of course, this is the way our margins are panned out over the previous 2 quarters. Let's bring out the next slide, and we can actually take a look at how you're actually seeing net profits. And of course, that's the reason why we are looking at a decline of around 4%. Revenue guidance, of course, stands will translate to around 0 to 2% for the upcoming quarter. And this is, of course, for IT service revenues. And in terms of key verticals, we do have declines for BFSI, consumer business, as well as healthcare, life sciences. The only positive here is that high technology has done well for the company. And of course, we'll be watching out for several of the other factors. But on the whole, it's been a very quiet quarter for Wipro moving in.
Hold a thought. Mindtree, which has just become a Larsen & Toubro company, also reported a weak set of numbers for the first quarter. This despite record deal wins. So L&T's got quite a bit of a task at hand, Agam.
Yeah, there's no doubt about the fact that L&T does have a lot of things to work through as far as Mindtree is concerned. Well, again, when it comes to revenues, we've seen a little bit of a miss in terms of the top line, despite the fact that it has actually scored, record deals. We are looking at a 0.3% decline in revenues. EBITDA has declined by 31%. Consequently, margins came off from 50.2% to 10.4%. And one might ask, why such a sharp decline? I'm going to talk about it in just a bit. Of course, we did see a 53% drop in profits too. So when it comes to your top line, as I was saying, a record 324 billion, about over 40% of these new deals were from the digital space, which they have also broken down. But your EBITDA margins decline. We're looking at about a 260 basis points on account of several factors. So we can have the next slide, and that'll give us a better idea about where the margins have been taken hit. Pardon me. 190 basis points planned wage hikes. Higher visa costs by as much as 30 basis points, and of course the stronger rupee has also led to another 40 basis points hit. But we must remember that Mindtree took a special allowance. They gave out a special allowance to employees, which is a one-off on account of this 20th anniversary. And well, that's the reason why it's looking at an additional 220 basis points hit on margins, which is why margins contracted by 480 basis points in all. So on the whole, it's turned out to be a reasonably decent quarter when it comes to deal wins, but may not necessarily be a very good one when it comes to operating margins.
What about the different verticals and how did they perform for Mindtree?
Sure. So this is the first time that they've actually gone ahead and give us a distribution in digital. But before that, we've seen strength in travel and hospitality and weakness in high-tech and BFSI. High-tech is an important one because the largest revenue pie is from the high-tech vertical. But they have gone ahead and broken down digital services into 3 sub-segments, which now are Mindtree Interactive, Data Sciences and Engineering, and of course Cloud Services. Finally, coming down to how Mindtree is done in terms of these verticals. So retail, well, it's been volatile, and the sector, the retail sector itself is, well, it's been a very, what should I say, well, not only volatile, but also unpredictable. BFSI has seen a decline, as has been the case of high tech, and as I was saying, about the largest proportion of revenues coming in from there. Travel hospitality has done well, up 2.5%. But while we can say that it's been a weak quarter on an operational basis for Mindtree, a lot of those factors are on account of one-offs, and well, at least the management is confident that they will see an improvement in margins going forward into the next quarter.
Agam, thanks for that. That's Mindtree for you. The Mindtree board also got a complete makeover yesterday. A.M. Naik being appointed as the non-executive chair of the company. L&T's CEO and CFO were also inducted into the board as non-executive members. They replaced some of Mindtree's co-founders like Rosto Ravanan, Krishnakumar Natarajan and N.S. Parthasarathi, who resigned last evening. ACC will be the first from the cement pact to report numbers today. Remember, volumes took a hit due to the lack of government spending this quarter, and it's likely to have hurt operational performance. Nikki Mirchandani is standing by with what the street is pricing in for ACC.
Well, thanks for that. We're not expecting great quarter coming out of ACC. Flat performance on the top line as well as the operational front. 3,875 crore is the number that we're working with on the top line front. That's almost a flattish growth out there. Operationally, we're looking at a number of around 616 crore. That compares to nearly 620 crore in the corresponding quarter. A slight amount of dip coming in there, and margins are expected to remain stable around that 16%. But if you look at the profitability, that's expected to go higher by as much as 11%. Key numbers that we're supposed to keep an eye out, apart from these basic numbers, will be the volume growth numbers. As you just mentioned, they're expected to see some amount of slowdown coming in on account of general elections and also on account of sand mining issues, water issues, which in turn have weighed down on the volume front performance of the company. 7.1 million ton is a number that we're working with, compares to 7.3 in the corresponding quarter. EBITDA per ton, according to Bloomberg, is expected to be flattish around that 869 per ton, kind of 866 per ton kind of level. But we're not going to be surprised, because a number of brokerages are working around with a number of more than 905 per ton, which indicates a growth figure of more than 5%. This is on account of two major factors. Despite the dismal volume growth, we have seen we could see cost optimization in terms of lower petcoke price and diesel price. That apart from that, higher prices which are prevalent in north, central and western India, which is where ACC gets 60% of its volume figure from, that have seen an uptick there. So realization and lower cost could be a saving grace for ACC.
Vicky, thanks for that. That's ACC. Care Ratings, meanwhile, has sent its managing director and CEO Rajesh Mukherjee on leave till further notice. This after an anonymous complaint was filed against him with the markets regulator. TN Arun Kumar, currently serving as the executive director of Care, has been named the interim CEO until examination of the anonymous complaint is complete. Remember, this is the second case of a rating agency sending its top boss on forced leave. Earlier this month, ICRA placed its MD and CEO Naresh Thakkar on leave as well, pending inquiry into some concerns raised by the market regulator. CFO Vipul Agarwal is currently the interim chief operating officer. The Union Cabinet has approved changes to the Insolvency and Bankruptcy Code. The amendments proposed include more power to the Committee of Creditors and extended deadline to the process. Payaswini is here with the changes on the cards and what this really means for the existing cases as well.
Thanks, Harsha. So there are 7 broad changes that the cabinet approval has outlined in the press release. Now, remember, all of this will be determined by the fine print as and when it comes out. But here's what broadly the changes look like. The first, of course, is that resolution plans can now contemplate mergers, demergers, amalgamations, and schemes. Looks like they are contemplating a single window clearance under IBC. Now, does that mean that, let's say, for instance, currently acquisitions are going to Competition Commission of India for approval? Does this mean that, that separate approval will not be necessary? Will become clearer as and when the language is out. The second has to do with the timeline. So currently, the the deadline for completing the insolvency process is 270 days. by jurisprudence, what courts have laid down that in this 270 days, the litigation period won't be included. Now the cabinet is proposing an all-inclusive 330 days timeline, which means that the entire litigation or judicial processes will have to be completed within these 330 days. Of course, experts are skeptical as to whether this timeline can be met or not. The third has to do with the COC powers. What the cabinet has approved it that the commercial decision will now come within the powers of COC, and the COC will get to decide on the distribution of claims to various creditors. I'm calling it the SR Steel case fix, because there the MCLAT had laid down that the commercial wisdom is not laid down as a power that the COC has in the IBC as it stands today, and it's probably to fix that, the ratio of that judgment that the cabinet has approved this decision. The fourth has got to do with distribution of claims, and to some extent that it addresses also the ratio that's been laid down in the SR Steel case with by the NCLAT. Before that, let me just give you a background on what distribution of claims is all about. Now, Section 53 of the IBC lays down a credit hierarchy or a waterfall, which essentially means that in what order creditors will get paid. Broadly, the hierarchy looks like IBC process costs, workman dues, secured creditors, operational creditors, unsecured creditors, and then government dues. Now, in this hierarchy, now the cabinet has, approved that this hierarchy, which has been laid down in Section 53 for the liquidation stage, will also now apply at the resolution process stage, which is again what the NCLAT had, pointed out in the SR Steel case, that look, you cannot apply the Section 53 waterfall that's meant for liquidation stage to the resolution process. Now, cabinet is proposing to fix that. The other change in this is that the credit hierarchy, besides the credit hierarchy, they have also said that the financial creditors will be in the waterfall above than, operational creditors, and dissenting financial creditors and operational creditors at the resolution plan stage will at least get the liquidation value. Now, this is important because these changes are proposed to come into effect retrospectively. So those plans which are not finalized or are facing appeals, in some cases we have seen that financial creditors have not made any payments in the resolution plan to dissenting financial creditors or operational creditors. That will need to be fixed from the day these changes come into effect. The fifth change has got to do with voting by trustees. So there is a group of, let's say, home buyers or debenture holders above a certain value for whom a representative is appointed by the NCLT. What the cabinet has essentially said is that how the voting will work in those cases. So let's say there are 100 home buyers, in a given case. 50 of them show up in a meeting. Out of those, let's say 10 have a vote share of more than 50%. What the cabinet is proposing is that it's the vote of these 10 who have the vote share of 50% and more that will prevail, and that will be the voting for taken on behalf of the entire home buyer creditor bucket. The sixth chain has to do with resolution plans that, the language reads that it should be binding on all stakeholders, central, state government and local authorities which have dues from the insolvent company. Now, there are two interpretations to this. One is that, some of these resolution plans contemplate change of licenses or, let's say, transfer of licenses. So far, the sectoral regulators were insisting that there needs to be a separate approval that needs to be sought from them. If the resolution plans are contemplating this, it's perhaps, this back and forth that the cabinet is now trying to plug and saying that, once the NCLT approves a certain plan, no separate approvals need to be taken. The second interpretation that experts are taking from this is that with regards to tax dues, can the resolution plans now, let's say, propose that the tax dues can be waived in totality, or the interest and penalty costs can be waived? That's the second interpretation. Of course, all of this will depend on the fine print as and when it comes out. The final has to do with the seventh chain has to do with the COC being able to order liquidation of the insolvent company if they can see no buyers or bidders prospectively coming for that corporate debtor. So what the proposed change is that the COC COC can order liquidation after the COC has been formed and before the information memorandum has been prepared by the IRP. Basically, information memorandum lays down the value of claims, the nature of claims, etc., etc. So after the COC has been formed and before the information memorandum has been issued, the COC can order liquidation. Back to you, Harsha.
Thank you for that, Paiswani, for a comprehensive explanation of what really happened. PSU Bank employees are hoping to draw a higher salary may have to wait a little longer. Negotiations between the employees and the officers' unions and the Indian Banks Association has hit a roadblock. Unions want the new structure to be applicable across all state-run banks and opposed to the variable pay being linked to the individual's bank's performance. Advait Rao Palepu is here with the details on this one.
Thanks, Harsha. So the Indian Banks Association, which is a body for all the public sector banks, has been in talks with the workmen unions and the officer unions for over a year now. This is regarding the 11th bipartite negotiations, which decide the salary structure for a 5-year period. The 11th bipartite wage negotiations will revise the salaries for workmen and officers from November 17 onwards in a retrospective manner. Now, under the proposal that was put in front of the unions in October 2018, the new salary structure would have a fixed component and a variable component. The IBA had proposed a 10% hike in the fixed component, which the unions rejected. But on the variable component, what they've suggested is that the bank's performance be linked to the individual's incremental salary on the variable component. The unions are opposing this move because they say that certain mistakes such as bad loans or certain decisions taken by credit officers could affect junior employees who have nothing to do with that. So they're not entirely opposed to a performance-linked variable package, but they would prefer it if it was individual-based and not entire organization-based. The other issue that has come up is that only 14 banks out of 19 public sector banks have given the IBA a mandate to negotiate with the unions for all workmen from clerical staff to scale 7 officers. But 5 banks, the State Bank of India, Punjab National Bank, Union Bank, Indian Bank and Bank of Baroda have given the IBA mandate only till scale 5. Essentially, they want to have a separate salary structure for their scale 6 and scale 7 officers. Scale 6 and scale 7 are essentially deputy general managers, ED level, very senior bankers. The unions are saying that traditionally there have been common negotiations between the banks and the unions, and therefore this fragmented approach is not right. And given that the service rules for all officers are common across the country and across organizations, this fragmented approach and unilateral approach by these 5 banks shouldn't be followed. They've also said that they are open to individual performance links like bonuses, incentives, but this should be part of the common structure for all the banks, rather than 5 banks have a separate structure.
Interesting that, Advait. Thank you so much for joining us with those details. Let's shift focus to the action in Karnataka. The Karnataka Chief Minister has taken the plunge and has called for a trust vote to prove his majority in the floor of the House. A lot will depend on the Speaker's decision on the 16 rebel MLAs who want to resign. The Supreme Court's given the Speaker the right to decide on their resignations, but also stated that their attendance can't be mandated. The numbers, though, don't seem to be in Kumaraswamy's favor right now. So what happens if the current government fails to prove its majority? Will it help the BJP to cobble up numbers, or will the state go for fresh elections, or is there a third alternative on the cards? Let's welcome in Narayan Lakshman, Associate Editor of The Hindu, on this conversation. Narayan, thank you so much for joining in. If you thought the New Zealand-England final was exciting, this might just do one better. What's going on? Is it inevitable that the Kumaraswamy government is done in?
I mean, Harsha, that's a perfect analogy because, again, lots of questions were raised about the new rules that were in play. And similarly here, we have a rather unusual situation where the sitting chief minister has raised questions about whether a judicial decision made in a case to which he was not party could actually be impacting the options available to him on the floor of the House. So obviously here we're looking at the question of whether he, as he has raised, the question of whether he can issue a whip or not, because effectively the court has allowed the resigned MLAs the right to abstain from the House, to not be part of the proceedings, and thereby that obviously affects the tally of the House, and therefore the minimum number which will make sure, which determines whether this government stands or falls. And similarly, whether the BJP actually has a shot at maybe forming the next government. So it's a rather, from just a purely academic or legal point of view, it's quite interesting and it's all up for grabs. I think the real question that people are grappling with is, why have these MLAs resigned? What are they sticking to their guns? And yes, certainly they seem to be from the resort. Will this government actually survive through some other machinations today? But at the same time, I should add that it does not look, from what we're hearing on the ground, it does not look like the actual vote will go through today, just given the number of speeches that are going to be made on both sides around the motion.
Narayan, the magic number is 105. Even though, for argument's sake, even if this government does not, if this trust vote is defeated, that not necessarily mean that the Yediyurappa and the BJP camp has enough numbers to form the government, does it?
Well, it may not have the numbers. We're hearing that the two independent MLAs may also side with them, bringing their tally to 107. There is a possibility. But, just as an outside observer, to me, what's striking is that, the game has been brought down to the wire, from having this. Firstly, obviously, when the government first formed itself, we had the BJP was invited first as the single largest party. And then this other, the JDS Congress government was cobbled together as the single largest combined. But the fact that it's come down from there right down to the wire is quite interesting to me. And I do wonder about what has been happening behind closed doors that has brought it so close to the needle being pointing the other way. So I think everyone's kind of watching the resort and the the hotel where the MLAs are holed up, and whether things will change on that count. But at this point, it's looking quite grim for the Kumaraswamy government, is what it sounds like to us.
One final question, Narayan. Where does this leave the Congress? There are reports that Siddaramaiah himself might be staking claim to form a government in case this falls. I mean, these are just at this point speculation. But what is Congress's game here?
Well, Congress actually has very few options, Harsha, because they don't have the numbers by themselves. Sure, they could seek to form another government with the alliance of what remains of the JDS, or indeed any of the independents who are there. But at this point, if those MLAs who've resigned stick to their guns, it's looking like it's going to be much more in favor of the BJP. At the same time, having said that, I don't think the BJP is going to find it straightforward either, because there is a very thorny question, a legal question to be resolved surrounding the right of a party to issue a whip, as Kumaraswamy has rightly pointed out, the Chief Minister. At the same time, the fact that the court has given these MLAs the go-ahead to abstain. Those two things directly contradict each other, and we need a legal resolution of that position. And whether it could be in terms of the Speaker having to decide beforehand on whether to accept these resignations or not, and then proceeding. These issues have to be ironed out before we can actually say we've got a predictable outcome coming towards us.
It looks like it's going to be a long day at the Vidhan Sabha. Narayan Lakshman, many thanks indeed for joining us with that perspective. Narayan Lakshman from The Hindu. We'll keep a close tab of what's going on at the trust vote. But out of time on the show for now. Thank you so much for watching.